What is going on, everybody, and welcome to another weekly update. And in this video, what I'd like to do is provide you a little insight into the upcoming week, whether that's events, earnings, whatever it may be, to potentially pivot the market. That's what I am here for. That's what I do. If that sounds like something you're interested in, consider subscribing because I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. So I've been a little absent over the past week, so I've been out of town. So I do apologize for that. Nonetheless, we are back to action. So this is the weekly update. So there'll be no Monday night update. This is essentially for the week. We got some pretty big things kind of brewing this week, considering that we're still about another week out from essentially the core CPI and monetary policy. Now, again, there's a lot of things that have been going on. Last week, the market, normally the volume is really dead, and we saw the market pump and then it essentially correct on Monday. So there's a lot of individual stocks. Essentially, the general index played range. Now the market is correcting for that. And you'll see that throughout this month. I don't really see a lot of action. Again, I think the biggest week in action is going to be on monetary policy, looking at that 50-point basis move. It's essentially kind of setting the stage for next year. Now, nothing is really out of the ordinary to this point. A lot of the stuff I've been talking about is still playing out, and it's unfolding before our eyes, and the market's not liking what it's seeing as it's being told a different story. But here, we're smarter than the average bear. So, being said, we know what is currently going on. I've talked about credit cards. I've talked about savings rates. I've talked about the housing industry and what that's looking like. Now, it does seem the rates are coming down a bit, but the biggest thing is that there was a lot of layoffs. Biggest question coming into this month and coming in December and playing into the end of year is, where does the consumer standing? Again, big layoffs in Amazon. What is that telling you in general? That is what we need to find out. But this month, I don't think we're really going to find, or December, we're not really going to find out what that just is. We won't see until the start of next year when we start delivering Q4 earnings and really kind of see what is going on there. Again, it's all about the consumer at this point. So a lot of data will be highly sensitive because people are trying to determine where that consumer is. So being said, the consumer price index, I think will have a lot more weight than it normally does because that is the next step. If we've hit peak inflation and have a gradual downturn, where is the consumer at? How quick can the consumer recover is the next question and what we are aiming for. But we have to also keep in mind that Fed will keep rates extremely high so that inflation does not start creeping back up, because if some reason, if inflation jumps back to 8 on the next core, this market is getting in an extreme panic mode. And that is what we do not want if we're assuming and trying to correct this thing where it currently stands. So Wednesday, we do have Powell at 1:30. I don't know what his presence is going to be in this brief or whatever that he has. Again, anytime he fields questions, the market is going to move. He is coming out at 1:30 p.m. Eastern Standard Time to talk about stuff, general market sentiment, I believe. And so, again, he'll be fielding questions about inflation and everything else. So, but will be a big market mover on Wednesday. Again, if he remains the way he is, could cause the market to sell a bit more going into the core and going into monetary policy. Again, those days are back to back on the 13th and 14th. So something to keep in mind there. PCE is Thursday. Again, a lot more of this data is going to start holding a lot more weight again, considering that now we've kind of potentially hit peak inflation. So now we're trying to watch and determine where that consumer is at. And so that's why a lot of these data sets will have more weight, even though I still believe a lot of them are heavily, heavily manipulated. And we'll really see where the consumer is at when Q4 reports earnings, which could be a massive blow, which could potentially take down the market around springtime is kind of what I'm thinking. But we have to see how that does play out. And Friday, we have non-farm payrolls. Again, a lot of people on severance packages. You're not going to get correct numbers. You're not going to see that for the next 3 months. So just be very well aware that the numbers that you're seeing are falsified numbers. If they're bad numbers, that is definitely not a good sign, because you still don't have the numbers from essentially the people rolling off of severance packages. You got some, I think, from the banks, but you still got these massive corporations. Hopefully, these people can turn around and get jobs quickly. If not, going to be in a world of hurt. Again, these high interest rates will continue to do damage on the economy until they actually come down. It doesn't matter if the Fed is dialing back on interest rates, that's fantastic, but they need to actually start taking them off. If they do not take them off, we're going to continue to see massive layoffs. And again, back to the whole thing, savings rates are low. Credit cards are getting ran up for just basic living expenses. So this is why you don't see inflation across the board. So being said, we have to see the health of the consumer is extremely important in moving forward. With also that being said, it's not going to determine the market in general. The market will be more pivotal off of the consumer going into earnings and kind of dictating what happens next. So that being said, again, a lot of the don't really have any upcoming earnings. What we're really watching here again is numbers are back to normal. Not a lot of not a lot of big moves priced in this week. Again, I think we're obviously waiting for monetary policy in that, but I think all that will kind of play in line with what's expected with a 50-point basis move, and then 225 after that. Again, that's increasing from where it's currently at. That's not taking anything off. And then understand that we're going to hold that way for a period of time. Not saying we may take off a little bit, but it's going to be a while. Once we actually stop increasing and stay flat, then at that point, we'll be able to determine if inflation's under wraps and then gradually roll off interest rates. It's not going to be a quick process, and understand there's going to be continuing layoffs as we come into 2023 and potentially a bigger black swan with the housing and mortgages and people trying to liquidate, and kind of how that whole scenario is playing out. So we do have to watch that extremely closely moving forward. So looking at the technical wise, again, hard rejection. The market does not want to break that 40.22 is a very strong resistance. So kind of really watching this wedge. I do believe we can come back down to the 3,900. We might play this big range between 3,900 and 4,022. I think we could potentially play this until coming into PCE. Again, I think it might get really tight. You might see bigger moves in individual stocks like we have been seeing. But aside from that, that is pretty much what I'm looking for on the general index. The dollar remains to hold essentially at 105 mark. Until it actually breaks this, you're not going to see a massive rip in the market. And I don't think this will even attempt to break this, and until we get the monetary policy, again, could very quickly go right back up as soon as they find out that, hey, this story in the background we've been talking about, it does exist, and we are in a recession, and we're not in some random growth recession like the market wants or our administration wants us to believe. That things are in pretty bad shape. So, yeah, key level for bulls is for the 105 to break downwards. Bears, essentially, you want this thing to essentially start breaking back up and making all-time highs again. But we'll have to see here. I think the market will just continue to chop through December. And if things do play out, you might get a little bit of a pump. At that point, we might sell into the PCE or sell into core and monetary policy, and then pump right back up. So essentially, I think we would pop potentially back up to the 110, then sell back to up to the 105 and kind of start the new year off there. And then I think ultimately for us, engaging the consumer, we have to see what happens through this fourth quarter and seeing where they're at. If things look bad there, again, there's a lot of people in severance packages. You're not getting those correct numbers. So yes, a lot of the data will hold weight, but you have to understand that the data is very, very, very misleading at this point, in that once these people start coming off of severance packages, you're going to start seeing some hurt. So again, February, March is kind of what we're looking for a major correction or some sort of major news that is going to be very, very pivotal on where we really do stand. So, and again, this takes time to play out. But from where we're at right now, Bitcoin has been selling off quite a bit. Yes, I'm kind of doing this middle of the day. Just be mindful of that. I just got in, so just trying to put this video together. Again, we are breaking new lows on Bitcoin. I do think Bitcoin can get down to the 10K, if not more. It just really depends. The FTX stuff is really starting to hammer away and just brutalize the crypto market at this point with more stuff unfolding. Tesla getting into this descending wedge. I really like this because that means I think Tesla is going to get into a massive rip here, which it typically does before earnings cycle. So I think you're going to get a lot of chop here going into the new year, and then you get a nice pop, and then it will sell off again with the market. I think is what we're looking at. So looking for this to potentially make a new low around the 160 mark again. I think that will be revisited before this thing really starts to break out, and then we'll go from that point. BA, again, value breakout here, really watching for this to break below 169. If it does break below that, again, I think we could revisit this 119 very easily. Again, if you want this thing to continue up, it needs to break the 179 to be able to do that. But we'll have to see. JPM, same thing, just like value. I don't like this overextended move here. We haven't even corrected this thing. When this thing does correct, you better watch out because it's going to come crumbling down, and it will correct at some point. Whether that is with the monetary policy or not, we can only retest the 4K22 mark so many times before it's going to roll over and give up and sell off even more. I think that's kind of what we're looking at, and so financials and value will hold us until that point. But a lot of different values. We can even look at Apple. Apple's been turning over, heading back down. Really watching that 135 mark on Apple is a big one for me. Airbnb is at a pretty critical level here at the 91. If it breaks back below that, Airbnb could be in trouble, but I do like the zone that it's currently sitting in. And that's pretty much it. I didn't want to make this video too long because it is a weekly, and Monday's already kind of passed, or we're in the middle of Monday. But I just want to kind of come on here, give you a quick weekly update, kind of what I'm looking at, kind of what we're looking at for the month, and then go for that point. So with that being said, and you've made it this far, I do appreciate your patience with me and being out of town. But now I'm back, and we'll start doing that in the videos tomorrow night to start doing morning calls again tomorrow. And then we'll get this thing back on track and head it into the new year. Got December, finish up December, but then we'll hit that new year. So with that being said, have a good one. I'll see you guys on the field.